Hi everyone, welcome to a new episode. This is a new series. I'm proposing 5 pointers. The idea is that just talk about 5 key points. Let me start with a quick background of what is happening right now. The fall is something like this, getting worse and worse and worse. Everyone is suffering. The big investors also are not escaping. The largest ones are also 15-20% down. Recent past, of course, was something like this, which is reverse. In fact, if you observe, most of the stocks indices, they are somewhere close to where they were somewhere around election results time, or maybe a little earlier only. The past, if you see, has been like this. Near future, 1 month, 2 month, 3 months, 6 months is a bit dicey because no one can predict immediate near future. Market could go sideways, they could go further down, they could be volatile up and down, or we could say that Friday was the last bad day and we'll see a recovery from Monday, and I hope that was true. This is Nifty since 2000. This is the dot-com burst. This is the Lehman Brothers crisis. This is the pandemic. This is approximately the Ukraine crisis. Each and every fall, which was always 20, 30, 40% in size, eventually in this exponential curve has got digested. This fall also will look something like this in the bigger scheme of things, as long as the country progresses. The first point I want to talk about is regular profit taking. Let me first take the example of Indian Bank, one of the holdings I have had in the pandemic time, and this is reverse of what I am trying to say in this point. This is the pandemic bottom, somewhere around 60, 70. I averaged and bought 40,000 stocks of this particular company, Indian Bank, at approximately 80 rupees. I kept buying as it went down and ended with 80 rupees as the average price. I had put in 32 lakh rupees of my own at that time as input cost, and still the stock was in deep losses. You can imagine 80 versus 60. I was down 25%, which is 8 lakh loss. After the pandemic, the stock recovered somewhere around 140, which was this particular peak. I exited. I recovered from a loss of 8 lakh rupees to a profit of 14 lakh rupees. Sounds like a big win, right? This stock recently I went to 640. If I had held on, I would have made a lot more money, and I missed pocketing additional 2 crore rupees in one single stock. In virtual losses, this is the largest loss I have ever booked in my life, a virtual loss, because again, it is not a money I lost. Now look at this dashboard of PSU banks. While each and every bank is red, if you see, Indian Bank is among the stocks that has fallen the least. Even SBI has fallen 25%. So this is not a coincidence that the bank gave me a lot of return. Now going deeper into the point, why I am talking in reverse of opportunity that I already missed. See, markets have changed. Right now, we have lot more new participants which came in during the pandemic. The new guys are mostly people who are new, they are traders, they call themselves investors also. Patience is low and expectations are high. See, there is a overlap between trading and investing to a very large extent. Most people who call themselves investors, they also are actually trading only. And by the way, today a lot of bad trades are becoming investments. Now let's try and simplify with this simple table. This is just for illustration. How do you decide whether you would book profit or hold on? See, you have to take care of few situations. For example, are we in a bear market or we are in a bull market? Are we entering one or exiting one? So for example, if you are in a bear market and if you have some profit, then you should immediately book the profit. There is no point in holding it because the stocks will ultimately fall only. If you are in bull market, then also booking profit should be done, for the simple reason that bull market, the stocks go up a lot, then they fall a lot because the bulls move to another set of stocks or another sector. So profit booking happens regularly. That is why you have a point here which calls sector outlook. Is the sector hot right now or going down? If the sector is expected to do well, say in 6 months, 1 year time, for whatsoever reasons, then hold. If you are entering a bull market or a run up, then hold. What is the outlook of the stock after looking at the sector? Is it the best stock in that sector? Is it a monopoly stock in that sector? What is the global outlook? Right now, Nasdaq is nearly at a peak, slightly lower. If markets, our overall ecosystem is doing well, then maybe book partial profits only, don't sell everything. What is happening to promoter FIDI holdings? If these are going up, then don't book profits. Hold on. There is something good happening. That is why people are extending their holdings right now. What is happening in trailing quarter? If you are measuring say year on year and 4 quarters back the numbers were very low and now you are expecting high numbers, then hold, don't book profits. If you have large quantity, this is a mistake I do all the time. Don't sell everything in one go saying that tomorrow it will fall and I will buy again. Never works as per your plan. So maybe sell 25% first time. If it goes up further, then sell 35%. By this time you have booked majority profit which is 60%. Then 20%, 20%. For normal quantities, sell it in maybe 2 lots, 3 lots, whatever works for you. Things get interesting if you have a multi-bagger which has gone up a lot, maybe 3x, 5x times. So suppose 100 rupee became 500 rupee. So you sell 50% of cost, which is 50 rupee first time and 50 rupees the second time. Now you can't go in losses. Next lot, sell 25% of maybe the cost or holding price, whatever strategy. But now you are getting into taking profits home. You have recovered the cost, you have recovered a lot of money also. Rest you can leave for long term for compounding. The next point is about what I called forward investing, and most people will disagree with this approach, which is okay. See, for most of us, salary is insufficient. Even if the salary number is high, the aspirations would be higher, peer pressure would be even higher. Potential buys are more expensive than the budget. Whatever laptop you want to buy, you will not be able to afford it. iPhone, whatever is your luxury bucket list, you will want to do a little more than what you are able to afford right now. As of now, stocks, many of them are at a throwaway price. The art is in identifying stocks which have at least the following attributes, which are growing in EPS, good cash flow at company level, good sound management. There is demand for that product. For example, summers are coming, ACs will be required, power will be required, and so on. Saturation is not there in that segment, market, state, wherever they operate, geography. And assess the competition, real, unreal. If it is unreal, then it becomes an unprecedented opportunity also. Like Varun Beverages, it is down a lot. Polycap kind of companies are down a lot. These are big monopolies. Will they be threatened realistically? That's the question you need to answer. Note that these two news came in today. India will remain the fastest growing major economy with 6.5% growth as per IMF in financial year 26. Also, GST collections again grew in February. This is growing at 9.1% to 1.84 lakh crore. Economy in general is not going backwards. It is going forward slowly, but this number is actually not even showing slowness. Think of an age say of 10 years and now whatever is your age, 25, 45, 35. I would say most of you would have graphed something like this for biscuit consumption at home. If you eat healthy, maybe Nutri-Choice kind of biscuits, but most people today for convenience sake consume cookies, and with affordability that consumption is growing only. What is the graph for India's population? The people who eat cookies or biscuits, this is also going up. What is Britannia's sales data going to look like? Yes, there are other brands like ITC also, but Britannia is among the largest players or the largest player. So what should happen to Britannia's stock price eventually? Now let me come to the topic itself, which was forward investing. Let's suppose you want to buy an iPhone, the budget is 60,000 rupees, which will help you buy the new 16E model, which was launched last week. But your aspiration is to buy the 80,000 one. Aspiration wise, you might want to buy even the Pro model, that's okay. And by the way, this video is always shot on an iPhone Pro only, 15 Pro right now. Most likely you will go and buy the 80,000 one on buy now pay later, which is a zero cost EMI kind of thing. Or alternately, hear me out on forward investment, especially for things that you can plan in advance. Look at this consumption graph. This is the consumption dashboard, non-edibles. What is not red? Page Industries, Gillette, Marico, and Ixigo. We can perhaps discount companies like Asian Paints where people are still unsure whether there will be displaced by the competition. Maybe Trent, is the growth really happening because some of the stores have been shut down off late, the Zara one for example in Mumbai. What about HUL and Titan? These have fallen 27%, 20%. So HUL, if it goes back to 52-week high, it will go up 38%, roughly 40%. Trent, even if it recovers halfway, then it will give 36% return. I don't know by when, maybe 1 year, maybe 5 years, maybe 2 months. Kalyan Jewelers, which has fallen a lot, by the way, nothing has come out till now whether there is some problem in the group or not, besides growth slowdown. It will have to go up 72% to recover the fall of 42%. So basically, idea is you invest 60,000 and you make this 80,000 over 1 year, 2 year by investing it in the right company, which is temporarily down but eventually will grow only. Not every stock can be trusted here to recover or grow the money here. So be very selective with the stock specific part. Literally each large expense can be planned this way, and you can really stretch your dollar or salary in INR in a magnificent way. You might have heard a lot, and I just gave that example in the previous section, that if a stock has fallen 50%, it needs to go up 100% to recover the money. It seems very daunting and close to impossible today for stocks that fell 50% last 1 month to go up 100%. The maths is actually very different and quite simple. Let me show you how. Suppose you have invested 1 lakh in a stock and it fell 10% 5 times. At the end of the fifth fall, you will be left with 59,050 rupees. To recover, this needs to go up. Now, let's say it is going up by 10%, 10%, 10%. By the time it goes up 10% for the fifth time, you have literally recovered the entire money. The sixth time, you go over 1 lakh actually. Slightly more is needed. I have created a couple of videos or a set of videos earlier around October on laddering. So that concept was basically, instead of buying or averaging when the stock falls, and I'll leave the links of these videos in the comment section below. You can watch them again if you haven't. Instead of trying to catch a falling knife where you don't know the extent of fall, wait for the rise to begin. Miss 1 or 2 good days maybe, at least the current round, then start laddering up. Do watch it if you want, but I am also trying to ladder instead of averaging. Let's suppose you own a bank which has fallen from say 100 rupees to 80 rupees. Typical thought is how to take that 80 back to 100 and recover your losses as the first step, and then maybe sell it or then start waiting for the profits. So first things first, no one can predict the recovery time, which I've said many times. No one can predict how much fall remains, whether the bottom is made or it will fall for another 1 month. My personal feeling is markets are due for some more fall. Now let's take example of IOCL. If you see the EPS, this is the annual part, 3, 5, 3, 8, then it became 13, 15, 12, then it fell. This is the pandemic part. Then it became 15, then 17, then 7. This is the Ukraine war part where crude became very expensive. So the profit plummeted. 30 after that. Now the TTM says we are around 8, maybe 9, 10, 11 for the year, which is like a fall. Usually we have seen is low EPS the year after is a fantastic year for IOCL. IOCL has always given a decent dividend. This year it is slightly lesser, but if you look at an EPS of say 30 rupees, government says minimum 30% has to be given as dividend. So 30 rupees, 30% dividend, at least 10, 11 rupees they will have to give as dividend. Usually they give more only in terms of dividend percentage payout. So if they're giving 10 rupee as EPS on a share price which is somewhere around 100, 110, 120 right now, you're talking about a dividend yield of 10%, 11%. Now let me take you through an illustration. Let's take an example of a stock which has fallen say from 200 bucks to 100 bucks in the fall. Your average price is 150 because you bought higher than you kept averaging down. And right now this stock is giving lesser dividend 10 bucks, but eventually it will give 10 only. That's the expectation. Let's suppose the stock recovers to 165 in 4 years. It has fallen from 200 to 100 say in 2 months, 3 months time, but we are saying it will take 4 years for it to not even recover 200, it will go to just 165. So you got 10% gain from the stock because 150 became 165, and for 4 years you got 10, 10, 10, 10 on average as the dividend. What's your total gain? 55 rupees on an investment of 150 bucks, which is 35% return. Not a fantastic return, 9%, but that's more than FD, and here I've not accounted for taxes. Usually the recovery from 100 to 200 should not take 4 years unless we are in a very bad recession. So for example, if it was In 2 years, you will get 20 from here and 15 from here, which means about 35 rupees in 2 years, which is 18% gain. 18% is not bad. Here you have piggybacked on dividend in addition to the growth in the profit for a stock that has fallen a lot. Specifically happens in PSU stocks, which give more dividend because of the government's ask. Note that money is money whether you get it from dividend or from stocks recovery. Yes, tax rates are different. Many of us right now would not be proud of our stock selection. The companies are fine, but not the best of the lot, especially in the environment we are operating in right now. We could have all opted for better stocks if we were to go back in time. See, what happens is sectors go out of favor. For example, consumption was hot, say 6 months back, then it fell. Competition can impact sales and profit. That expectation can be there or it can actually happen also. For example, if Campa Cola sales are shooting up, then it will impact the Pepsi and Coca-Cola sales. This is the expectation. So foreign beverages have fallen a lot. Economic slowdown can impact growth. This is what is happening right now. The expectation is economy is slowing down. The growth will be there, but the percentage will fall. As a result, the PE expectations are getting rational. And also, this quarter, the results were reflecting this aspect. Policy action can punish certain stocks or reward also. For example, when windfall tax was introduced, it really punished the entire oil and gas sector for close to 1.5 years. Also, some stocks are legally manipulated. What do I mean by legally manipulated? That they are not violating any laws or rules of SEBI or RBI. For example, HDFC is heavily manipulated or managed by FIIs. They buy and sell and milk HDFC like anything. There is no promoter. So the stock you invested in could be in for more punishment than average if that stock is, let's draw an imaginary line, below this average line. If your stock is above this average line, for example, if you owned HDFC Bank today, your portfolio would not have fallen much. Classic example is Nifty 50 falling less than Nifty next 50, and the small caps have fallen a lot more, 60-70% in many cases for now. If you look at this consumption pack, for example, all these stocks are close to 52-week lows, 1%, 1%, 0% because that hit a new low today. Trend is far off still, 23%. Some stocks have not fallen. Marico, Page Industries, for example. Every sector has certain stocks which have fallen more than the others. Every sector has some leaders, not necessarily the largest company, which have not fallen much. There is a reason always for this. For example, you might feel that Marico or Page Industries will fall a lot more. You might also see that they recover the first whenever there is recovery. Let's take another example. This is microfinance. 290%, 253% distance to go to 52-week high. These stocks have fallen 70-75%. There is a stock called Mass Financial which has just fallen 32%. Just is a bad word still. It is still 48% away from 52-week highs. Credit Grameen is 19% away from 52-week low. Rest everyone is at 52-week low literally. If you go to the sibling sector, which is normal NBFCs, not microfinance, which is also NBFC, you will see green stocks, Bajaj franchise for example. But all public sector finance companies are red and deep reds. REC needs to go up 81% to make a new high. Muthoot Finance, which got a nod from RBI to open new branches, that is in green right now. But its sibling IFL, which also gives gold loan, that is red. So there is merit in identifying the leader in that sector, not just by market cap. Market cap is a good indicator, but not the only indicator. Let's take a hypothetical example to illustrate my point. Let's suppose you have 100 stocks of HDFC Bank. Would you sell at 1000? Would you sell at 1500? Would you sell at 1800? My guess is your answer would be not at this level, maybe at this level, yes at this level you will. Now let me flip the question. Suppose your buying price is 600. Would you sell at 1000? Mostly yes. If the markets are falling like anything, you would want to take home the 400 bucks. If your buying price is 1485, would you sell at 1500? Slight profit. Mostly yes, you will take it. You will free up your capital. What if your buying price was 1880, which is the lifetime high? Would you sell at 1600? Mostly the answer, which was yes at the top, would have changed to no by now. We don't want to book losses. We would book profit as soon as it happens. Or maybe slight loss is okay. See here HDFC Bank, this is the stock price since last 5 years. Now if you draw a band here, you would see that HDFC Bank has been in 1400 to 1650 or 1700 kind of range for nearly 4 years now. Why do you want your capital to be stuck? Maybe ladder when the stock goes up, starts going up, breaks the ranges. Let's imagine on a day, say day one, you have a starting capital, whatever that amount is. You buy and sell certain stocks, you make some money or you make some losses. If you're a trader, you can also sell and then buy. This ending capital typically is the starting capital for the next day. If you have stocks in your portfolio, if not sold them, then they are a part of your portfolio. Instead of cash, you will have stock values. You again buy, sell, buy, and then you have an ending capital at the end of day two. Typically, you keep playing with that money. That is how it happens. If you are an investor, you will buy, and after 30 days, 60 days, 120 days, whatever day, you will sell at a higher price and try and make money. You will not sell and buy. Now let's take an example. Suppose you start with 1 lakh rupees divided between two stocks, stock 1 and 2. At the end of day 1, you have a slight loss and your capital reduces to 96,000 rupees. Stock 1 is doing well, but stock 2 is not doing that good. You identify a third stock right now which looks promising that next day it might go up more than stock 2, for example. Maybe there is a policy announcement, maybe they have got an order, but you don't have fresh capital to invest. Stock 1 is already doing well, maybe better than stock 3, so you don't want to obviously sell it. What would you do because stock 2 is in losses right now? Will you sell stock 2 and book losses and buy stock 3 because stock 3 may go up or no? So let's see what happens on second day. The stock 1 again goes up, that 52,000 became 53,000. You retained stock 2, you didn't trade it for stock 3. So the 44,000 reduces to 42,000, another 2,000 down for the day. And your capital now becomes 95,000. It was 96,000 yesterday and it did not increase to 99,000 because stock 3, which increased from 44,000 to 46,000 notionally, you didn't buy it. Note that you were not sure whether stock 3 will go up or not, but you are also not sure what will happen to stock 2. So the point I'm trying to make is your portfolio value is the current value of the stocks. It is not the purchase value. If suppose your 1 lakh became 1.2 lakh, you will talk about 1.2 lakh, not 1 lakh, right? If 1 lakh became 0.8 lakh, then you have 0.8 lakh, not 1 lakh. Retaining this 0.8 lakh at 20% loss will not change the situation. You now own 0.8 lakh, 80,000 is your value now. The decision now is which stock will take that 80,000 to 1 lakh in next few days, months, quarters, whatever. If there are faster horses to take you from point A to point B, it doesn't matter whether you are starting the journey or you are in the middle of the journey. You are here. You are not here. You need to go from this point to this point. Find the fastest horse. If needed, change the horse. While the portfolio losses for you and me could be different, my losses could be higher than yours or slightly lower. But note that this fall is unique. It is different from normal falls. So there is no point in contrasting this fall with what happened, say, in 2000 during pandemic, or in the Ukraine war, in the Lehman crisis, or in the dot-com burst. Yes, we can take cues from them. Yes, we can learn from them, but the same outcome may not come again. You will have to be a bit non-conformist, maverick, or think differently to have a favorable outcome. Note that your journey is like stock markets. It will eventually go up only. Important is to hold on, stay put, take the right decisions, identify the right stocks. I am in the middle of completely reviewing my portfolio. Today I created a list and that list was around 120 stocks, mutual funds, ETFs, etc., from which I have to decide what my new portfolio will look like because there is so much value around us. I don't want to hold on to the old bad decisions. I want to find the fastest horse. And don't try to bottom fish, it works by luck only. Thanks for watching. I will see you next time.